Hi friends, welcome to Banking Needs. Today we are going to discuss about Shriram Life Cashback Term Plan. Before entering to the topic, please subscribe to our channel. Shriram Life Cashback Term Plan is designed to provide an affordable, easy to obtain financial security net for you and your loved ones. It pays a lump sum payment in case of unfortunate death, helping your family to reduce their debts and protecting their financial security. At the same time, the premiums paid towards this policy will be returned on maturity. Features: insurance cover at affordable rates, return of premiums at maturity, additional protection through riders. Next, plan eligibility. Eligibility criteria: age at entry minimum 12 years, maximum 50 years, maximum maturity age 70 years, policy term 10, 15, 20, 25 years, premium paying term 5, 10, 5, 7, 10, 15, 5, 7, 10, 15, 20, 5, 7, 10, 15, 25. Sum assured: minimum 2 lakh rupees, maximum 2 lakh rupees. Minimum annualized premium 3000 rupees. Mode of premium payment: yearly, half-yearly, quarterly and monthly. Next, benefits under the plan. Death benefit: in case of death of the life assured during the policy term, provided all the due premiums have been paid till the date of death, death sum assured will be paid. Death sum assured is designed as highest of 10 times the annualized premium, 105% of all premiums paid till the date of death. Sum assured, where sum assured is the amount chosen by the policyholder at the time of proposal. Next, annualized premium means the premium payable in a year chosen by the policyholder, excluding the taxes, underwriting extra premiums, rider premiums and loadings for model premiums if any. Next, all premiums paid is the total of all premiums paid till the date of death, excluding any extra premiums, any rider premiums and taxes. Next, maturity benefit: in case of survival of the life assured till the end of the policy term, all the premiums paid during the term of the policy, excluding any extra rider premium and taxes, will be returned. Next, additional protection through riders: if any opt any of the following riders by paying additional premiums, the rider can be optioned at the inception of the policy or subsequences of any policy anniversary. First one, accident benefit rider: in case of death of total and permanent disability due to accident during the rider term, we will pay 100% of the rider sum assured. Also, if the life assured becomes totally and permanently disabled in any accident, we will waive off all the future premiums under the policy. Next, family income benefit rider: in the event of accidental death or if the life assured becomes totally and permanently disabled due to an accident within the rider term, 1% of rider sum assured is payable every month immediately from the end of the month of accident for a guaranteed period of 10 years or till the end of the rider term, whichever is higher. Next, Shriram Life Critical Illness Plus Rider: if you are diagnosed to the suffering from any of the 24 specified critical illnesses, we will pay 100% of the rider sum assured on survival of 30 days following the date of first confirmed diagnosis. This rider also gives you an upside of increments in your rider sum assured through loyalty additions. Next, premium paying mode: you can pay your premiums in yearly, half-yearly, quarterly and monthly modes. Where the premiums are paid in other than yearly mode, the installment premium would be the annual premium multiplied by the model factor. Half-yearly 0.5087, quarterly 0.2566, monthly 0.0860. Next, grace period: a grace period of 30 days is allowed for payment of due premium for non-monthly modes and 15 days for monthly modes. If the death of the life assured occurs within the grace period but before the payment of premium, then due the life cover will be available and the death benefit shall be paid after deducting the said unpaid premium. Next, lapse: if at least 2 full years premiums have not been paid and the premium due is not paid before the end of the grace period, the policy will lapse and no benefits will be payable under the policy. Next, paid up value: if the premium due remains unpaid at the expiry of grace period after the first 2 years premium have been paid, the policy will not lapse but will continue as a reduced paid up policy. The death and maturity benefits payable under a paid-up policy are death benefit. In case of the death of the life assured, provided the policy is paid up sum assured will be paid to be nominees or beneficiaries, where paid up death sum assured is equal to total premiums paid by total premiums payable into death sum assured. Next, maturity benefit. In case of survival of the life assured up to the end of the policy term, provided the policy is paid up maturity benefit will be paid on the date of maturity, where paid up maturity benefit is equal to total premiums paid. Next, revival of lapsed and paid up policies. If you revive a lapsed or paid up policy within a revival period of 5 years from the date of first unpaid premium by paying all understanding premiums along with interest as declared by the company from time to time, along with other revival requirements as per the board approved underwriting policy, upon revival your benefits shall be restored to full value. Next, surrender value. Your policy will acquire a surrender value after all due premiums for at least 2 full years have been paid. On surrendering the policyholder will receive surrender value which is higher of guaranteed surrender value and special surrender value. Guaranteed surrender value GSV. The guaranteed surrender value is expressed as a percentage of total premiums paid as per the table. Next, special surrender value SSV. Your policy is eligible for special surrender value which depends on the actual experience of the company. The policy will terminate once the surrender value have been paid. Next, loans. No loans are granted under this plan. Next, terms and conditions. Free look period. The policyholder has a period 15 days from the date of receipt of the policy document to renew the terms and conditions of the policy, and where the insured disagrees to any of those terms or conditions, he has the option to return the policy stating the reasons for his option, when he shall be entitled to a refund of the premium paid, subject only to a deduction of a proportionate risk premium for the period on cover and the expenses incurred by the company on medical examination of the proposer, if you any, and a stamp duty charges. A request received by the company for free look cancellation of the policy shall be processed and premium shall be refunded within 15 days of receipt of the request. For any delay, the company shall pay penal interest at a rate which is 2% above bank rate from the date of request or last necessary document, if any, whichever is later, from the insured or claimant as stated above. Next, alternations. Change of premium payment mode is allowed under the plan. Next, minor leaves. The life assured whose age is less than 18 years at date of commencement of policy shall be considered as minor. In case of minor leaves assured, the risk cover starts from the first policy anniversary. In case of death of the minor life assured during the first policy year, the total premiums paid will be refunded. On the date of attaining majority, the policy shall be vested automatically in the name of the life assured. Next, suicide exclusion. In case of death due to suicide within 12 months from the date of commencement of risk under the policy or from the date of revival of the policy as applicable, the nominee or beneficiary of the policyholder shall be entitled to 80% of the total premiums paid till the date of death of the surrender value available as on the date of death, whichever is higher provided the policy is in force. Next, tax benefits. Tax benefits may be available as per prevailing tax laws. Tax benefits are subject to changes according to the tax laws from time to time. Next, nomination. The life assured where he is the policyholder can at any time during the policy term make a nomination as per section 39 of Insurance Act 1938 as amended from time to time to receive benefits in the event of the death. Where the nominee is a minor, the policyholder shall also appoint a person to receive the policy monies during the minority of the nominee. Next, fraud or misrepresentation. In case of fraud or misrepresentation, action shall be initiated in accordance with section 45 of the Insurance Act 1938 as amended from time to time. I hope you all understand. If you like my explanation, please subscribe to our Banking News channel. Thanks for watching.